month, and now we're at the reverse situation, Brian. We're at a point where the puts are screaming high.
Yeah, they were screaming high, but now look at the last couple trading days here. We're starting to see that reversal back where people are selling out of the insurance on the downside, the puts they own to protect their stock positions that would got up so far bid as people sort of freaked out about things, but now that's kind of reversed itself. And if you take a look at
the leading indicator, Brian, can this tell us something about the future? Hello and welcome to Market Matters presented by Miax. I'm Joe Teague. With me is Brian Stutland. Brian, how are you today?
Great. Happy Monday. Good trading. Market off to a good start, rebounding from what was a pretty ugly, let's call it month, really.
Yeah, it was a fantastic 6 months, November through March. Boom. April hit like a ton of bricks. Maybe people raising money for taxes. I don't know, but you had the double whammy, Brian. You had interest rates rising, geopolitical concerns rising, and it just turned into a massive risk-off story.
Yeah, and really our big story today is our AI play, the tech play on the market. Is it over? And it kind of feels like something's going down to shake things out, whether this is going to be a carpet shakeout or not. We're going to really get into this on this show when we talk about semiconductors. We talk about other names reporting this week. Google, big earnings this week. We're going to talk about it on the show. But, reports out that the Mag 7 is dead, Joe. What do you think?
Yeah, last week, it's some bad news out of the semiconductor. TSM said, some of there might be weaker demand second half of the year, and it went to pound town. The market took NVIDIA last Friday down 10%, Supermicro down 10%. Investors were just throwing in the towel, saying enough is enough, and maybe that's exactly what the bulls needed to finally say this is over. And it is a pivotal week, Brian. We got the PCE. That's the Fed's preferred inflation metric. That's coming out Friday. We have a ton of earnings. We have 40% of the market cap of the S&P, the NASDAQ, 15 trillion in market cap. Tesla, Meta, Microsoft, and Alphabet. So it is a huge week, to say the least.
It really is. The PCE number is coming out at the end of the week will also be very big. Obviously, the Federal Reserve May 1st are going to talk about interest rates. We had a lot of discussion coming out on a lot of Fed governors this week. So we'll get into that on the show and what we think about it. But yeah, it's going to be a big week. It's going to be a market mover for sure this week, Joe.
Yeah, and last week, we were sitting here, volatility was high. It got higher through the week, but we've come down a little bit to start the week. The market's off on the right foot this week. Last week, some of those days the market got off to the right foot and then sold off throughout the day. Hopefully the market can hang on to the gains today, but volatility finally is coming in this week. We saw a couple weeks in a row where volatility was rising, so that certainly is good. We also, again, are in the situation where the front month future, Brian, is below the spot.
Yeah, I mean, this to me seems like an indication that the VIX is headed lower. I mean, you look at that, and the front month being down at a very significant discount relative to where the VIX is at is an indicator that VIX futures traders are saying, hey, volatility needs to come down. The little blip we saw for this month of April maybe is coming to an end here. I mean, the rest of the curve looks like it's kind of normal relative to how it looked maybe, let's say, a month or 2 months ago, where it was a little bit steeper, but that's supposed to be the case when you have a bull trending upward market. But here, it's just interesting how much of a discount. We have the Federal Reserve that's going to talk about interest rates coming up in a couple of weeks. We have earnings right now, and yet the VIX stays at a premium to the front month May VIX future. So I think it's potentially a leading indicator that VIX is coming down lower.
Yeah, and there's some other indicators out there now. If you like volatility, if you like this discussion, make sure to check us out every week because at the start of the month, Brian, you and I were talking about, boy, this sure does seem like a contrarian indicator down here. This Skew Index where these calls were, relatively expensive compared to the puts. That can be a sign the market's getting a little frothy. There's some FOMO going on, people buying these calls. That can be a point in time when things reverse. That's exactly what happened at the start of the month. And now we're at the reverse situation, Brian. We're at a point where the puts are screaming high.
Yeah, they were screaming high, but now look at the last couple trading days here. we're starting to see that reversal back where people are selling out of the insurance on the downside, the puts they own to protect their stock positions that would got up so far bid as people sort of freaked out about things, but now that's kind of reversed itself. And if you take a look
Is
at
this a leading indicator, Brian? Can this tell us something about the future?
I think it can. We can go back to the future on this and take a look and see how this plays out. But yeah, I mean, look right there. When we see this skew index get bid up, where people are racing for puts all of a sudden out of nowhere, and then it reverses for a few days and heads lower. If you look at every sort of bottoming process in the market, that's usually been a turning point to rebuy and step back in and start buying.
Yeah, and last November, perfect case in point. Puts got way too expensive at the end of the month. We know interest rates were sky high. We're going to get into that. And not too long after, we saw the market bottoming right here. So something we're watching. But can we go one step further? What does it look like versus volatility, Brian? Well, the process happened was volatility made a double top here in October, but a big signal, something we'll be watching this week very closely for, is while volatility went back higher, we did not get that rise back up here in the skew index, and that was a sign that the all clear was about to be given.
Yeah, and then now look right now. This looks like a repeat, right, of before, where the skew index is giving a all clear signal. I talked about it last week on a number of things in media, and 18 level here, close below there on the VIX could be a signal that VIX is coming down. Look how significantly it dropped last time. This happened before the time before that. So if that's an all clear sign, stocks have to go higher, right, Joe?
Yeah, and well, the other thing that happened, is the market can stay flat for a period of time, Brian. This morning we saw, since Friday's open, we had the market lower and volatility lower. When we see that type of a pattern play out over a couple of days, that can mean the market just wants to sit still for a while, and that really tracks with the seasonality that we've seen in election periods. It's an election year. Going back in time, when you look at the election years where the best quarter was the first quarter, we know we had a 10% return in the first quarter. This is what the pattern is. We're right in the middle of this sell-off we see in April and May. And at the end of May would be the time the market starts to return to a rally mode.
Yeah, really. And this kind of actually gets into really our big story of the week here, because I want to talk about the Federal Reserve, what governors are saying, and then how this sort of, seasonality, how volatility is playing into what kind of trend could be developing next. So let's just first look at some of the fundamentals here. We had a bunch of governors speaking over this last month. We really kind of laid out a chart whether their speak was dovish, hawkish, or kind of neutral. And I think it's only coincidental. I circled the bullseye here on what Powell said, and he was dead spot on between everybody, because we had two doves, we had two hawks, we had two people saying, we're restrictive enough. To me, it says they may not just not cut three times, they may not cut at all, and are really going to be data driven over the next few weeks just to see how that plays out. But I don't expect rate cuts to happen as much as people think they're going to happen.
Well, I would say right now where we're sitting, the rate cuts should not happen. I know we have higher than expected inflation, and in my view, inflation is probably even higher than what we see in the numbers. So maybe they should not happen. But what should happen and what's actually going to happen, in my view, are two different things. I'm maybe a little more cynical than you, Brian. This is an election year. I think the Fed's doing everything they should be doing, saying it's data dependent, saying, hey, we are concerned about inflation, but they're just talking the talk. I think when push comes to shove later on in the summer, they're going to be talking about rate cuts. They're going to be pushing the economy as much as they can. And maybe that's the best thing for the economy for the next 6 months. 2 or 3 years down the road, maybe it's not the best thing for the economy, but that's not apparently what they're interested in right now. They're looking for immediate returns. Just think we just got another $100 billion passed through Congress this week. The government spending money like crazy, and the Fed talking about cutting rates. So inflation, it might be a problem, but maybe we'll push that down the road. And if that is what's going to happen, Brian, at the end of the day, stocks are going to do pretty good over the next 6 to 12 months.
Yeah, I mean, baseball's getting into full swing of things, and so I bring up the immaculate inning, the immaculate government and lack thereof of consideration of our spending is unbelievable. Really, it's amazing. And so, I mean, Joe, do you think though, given where the Fed is standing, where interest rates, the 10 years obviously moved significantly higher than where it was a few weeks ago. We teased at the top of the show. Is the Hulk Hogan leg drop coming for tech stocks, for AI, or is there something more behind it?
Well, I think the market's actually trading just like my prediction is. We talked about gold a couple weeks ago. People are still betting on inflation in spite of the fact that the Fed is saying that they're going to be hawkish on their policy. And just go back in time of the past few years, Brian, looking at the 10-year yield versus the semiconductor index. I mean, yes, over the past few years, both are higher, Brian. Both are up over that time period. But you notice every time we get this situation where the market starts focusing in on the 10-year and it rises really quickly, we get some panic and some risk-off mentality, and people sell out of the SMH. And every time the 10-year peaks in yield, that's a bottom, a short-term bottom in the semiconductor index, and has a big rally shortly thereafter.
Yeah, so the question really is what time frame are we in? Is the sell-off going to continue? Is the 10-year going to continue to rise? I kind of would like to take a look at it. If you kind of look further back here, sort of compare where volatility is. We talked about at the top of the show, volatility coming off, making lower highs. We saw the lower highs of the VIX and volatility back in 2021. We saw inflation coming in. The Fed called it transitory. We know that was not true. But now we're seeing inflation tick back into the system again. I think the Fed is going to be late to the party once again, or the market is in general. They're still expecting rate cuts. They got to get through an election year. And so they got to be careful about how much aggressive they can really be in controlling inflation. So if you look back at the beginning of 2021, same thing, 10-year yields rocketed higher as inflation sort of crept back in this reflation trade. We saw the SMH sell off pretty significantly, but when volatility came down again and the 10-year sort of held still, SMH made new highs, right? And so we could be in the 6 to 9-month period where we're going to make another leg up in the semiconductor index.
Yeah, and just going big picture again, Brian, it's just amazing to me to see these lower highs that we're seeing in the spike index and volatility in general. Every time we get a new peak, we get a lower spot right here. So this is a bit of a coil for me. And, I'm not saying this is great news in terms of volatility. I think at some point that's going to snap and we're going to see a big volatility spike. But to your point, there is a very strong correlation. And at some point when this 10-year stops going higher, when it turns around, I think the risk on trade is going to be back on in a big way.
Yeah, I mean, look at the trend of the volatility indexes and see we haven't made a new higher high, right? And actually that occurred in the back half of 21 before 2022 sell-off in the market. So I think we need that sort of systemic reaction to occur where people get really concerned about the downside to the market. Otherwise, to me, this seems like a buying opportunity. Like at the beginning of the month, I was feeling, oh my God, this is going to be repeat of 2022, higher interest rates, inflation, people not expecting it as much. But really, I think we're still about 6 to 9 months away from that.
Here's the end of the day story for me. That I'm concerned to the downside. I'm concerned about the risk to the market when the economy slows down. When we start to see the unemployment rate rising, I think we're going to see a different story in stocks. I think it's going to be different when it comes to rates dropping. I think when you see the rising unemployment with yields dropping, that's going to be bad. But if you have unemployment stable where it is, the economy, being fueled by all this government spending, I think it'll be good for stocks with interest rates coming lower.
Well, that's why I think actually, good economy, good unemployment rate is why inflation probably refuels itself in the back half of this year. Maybe we stay above that 2% target for the Fed here. And then in the back half of the year, we start to get some upticks in inflation because the Fed has, sort of been lazy about things per usual.
100% with you. All right, let's go to the stocks of the week. Big one this week, Google, Alphabet, has earnings coming Thursday. This is a company, Brian, that has really bucked the trend this month. It's done much better than its peers in the NASDAQ, much better than its peers in the Mag 7, still above its 20-day moving average. Most of those companies are below its 50-day moving average. So, you look at the market, it's halfway between its 50-day moving average and 200-day moving average. So Google has really been a stellar performer this month. And I think I'd love to see Google become the new leader for the second quarter and drive the market higher. What are you thinking, Brian?
Yeah, I think so. I mean, look at this chart that you brought up here. When you look at the 20-day moving average versus the 50-day moving average, every time the 20-day has popped above the 50, well, not every time, but a lot of the times there's been some true momentum behind Google and it tends to move higher. So we got that a few weeks ago, and now the stock has been very strong relative to the rest of the market. They're positioned excellent in the AI play. I think they may be the clear-cut winner when it comes down to it. And leader in this. Obviously, there'll be lots of other players moving into the market, but they might be a leader.
Yeah, I think people are focused on the large language model AI. Google got off to a false start on that. Their first video was really weak. OpenAI was, first on the market. Microsoft seemed to have all the advantage, but I think slowly but surely they're getting back into it. I really think they're ahead of OpenAI when it comes to AI coding. But I think the deal they have with Apple on the phone to be their AI, on their phone is huge. Apple makes up a huge share of the phone market. Most people use mobile for all their computing, essentially. Google also has a big share of the phone market. So I think they're looking to become, when you think of internet search, you just say, oh, I'm Googling something. I think they want their AI, to be known as, I'm just going to Google it. They want to be known like that. Remember, they became the leaders in search, Brian, because they got their search on Yahoo. There was a once upon a time when Yahoo was the place where people went to on the internet first. So I think that's a big deal for them. And I think there are so many other applications that Google has in when it comes to AI, and they're just starting to get started in it. So I think I'm really looking forward to this earnings event for them. I want to see what they have on tap.
Yeah, well, their earnings reporting later this week, and I do have a trade for it because, look, when a stock runs up to highs or just runs up ahead of earnings, I always get worried that it's buy the rumor, then earnings come out, expectations get so high, and it's sell the news. So I'm not necessarily a buyer of the stock, although we actually do hold the stock for clients, and in a lot of our strategies, we're portfolio managers on a couple mutual funds. So we like the stock, Joe. It's just that if I'm sort of a day trader or one that's going to sort of step in right now, I think this option trade makes a lot more sense because, look, take a look at it. If I sell the July 140 put, these are options expiring in about 3 months, and I buy a July 160, 190 call spread, the net cost of this is $4. But remember, this is cash covered. So I'm holding my cash waiting to be put to the stock. If I have to buy the stock below 140 because I'm short the put, right? I can hold that in a money market fund, collect interest of about $1.75 over this time frame. So really the true cost of this trade is really only a couple bucks. And I get 100% participation of Google from 160 to 190. And I only have to buy Google down at 140. So I'm like almost protected and covered if the stock sells back off of earnings. And what's interesting about this is I looked at open interest in Google, and the 160 strike for options expiring this Friday has a huge amount of open interest. And when we see that in stocks where things are skewed more towards call trading, which typically occurs in Google, that 160 strike can act sort of as a repellent. So I think after this earnings, we either blow through 160 or we have a little bit of a pullback, maybe back to that 50-day moving average. And so I'm going to use options to sort of play that move.
And that makes a lot of sense to me. And again, this is just something you're looking at for new initiations of Google. You'd rather enter Google position with this trade rather than buying the stock. Is that right?
Yeah, that's right. I mean, I'm going to use an option way to, I like to say risk less and make more. That's always nice, right?
Yeah, that's the goal. I think everybody would be happy with that. We like to, at this point in the show, we'd have a question of the day. Always remember, tune in every Monday, 1 Eastern. on the Trade Hub. This is Market Matters presented by Miax. Brian, I got a question for you. Why is the market seasonally soft in May?
When or why?
Why? We have the saying, sell in May, go away. What's the story?
Well, for me, it's always been seasonality, but maybe there's obviously driving season. Sometimes oil ticks up. That kind of freaks people out. Interest rates kind of stay high. I don't know. What do you got for me?
Yeah, it's a great question. It's the middle of the second quarter. People may be taking profits off of some of their winners early on in the first quarter, kind of reevaluating. I think that makes a lot of sense. Oil going higher into that driving season. Just a softer time of the year, seasonally in the economic cycle. Things really pick up around the fourth quarter when school starts back up again. You get May, people are getting home from college. Things start to slow down. So, yeah, I mean, it really is a fascinating seasonality component, but it is what it is. We just have to accommodate it and trade around it.
Yeah, well, certainly we'll be watching that. Like we said, big earnings season coming up, a lot of tech earnings late this week and then into next week. So this should be pretty big. Obviously, we highlighted a bunch on volatility and what that means for the market. So it's been a great show. We'll continue to update on this show. Tune in, like Joe said, every Monday at 1 p.m. Eastern. We'll be here updating either our old trades, talking new things. But this has been a great show. Make sure you like or subscribe if this is the first time you're watching. We love to continue to see the channel continue to grow and bring more information to you. So this is Brian Stutland of Equity Armor Investments, my colleague Joe Tige, and tune in next week to Trade Your Hub in the show sponsored by the Miax. Thank you.
All opinions expressed by Trade Hub contributors are solely the contributors' opinions and do not reflect the opinions of Trade nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Trade nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Trader Inc. is the parent company of Trader Brokerage Inc. Trader Brokerage Inc. and Trader Inc. are separate entities with their own products and services. Securities products and services are offered through Trader Brokerage Inc. Trader Brokerage Inc. is an independent subsidiary of Trader Inc. All rights reserved. Member FINRA SIPC.